Hey everybody, Rob Maurer here, and today we are talking about reports on Tesla's numbers in June for China, Panasonic CEO comments on Elon Musk, an updated note from Goldman Sachs on Tesla stock, and a Munro update on the Tesla Model Y. Tesla stock on the day finally taking a bit of a breather, down 1.7% on the day to $1,365.88. That compared to the Nasdaq with a strong day up about 1.4%. We saw a pretty big drop in Tesla stock about 2 hours before close. I'm not exactly sure what drove that, but Tesla did recover towards the end of the day, adding about $40 per share in the last hour or so. All right, we'll start off with the likely biggest news of the day, which is some reporting on Tesla's numbers in June in China. Reuters and many other outlets today are reporting that Tesla, according to the China Passenger Car Association, sold 14,954 Shanghai-made Model 3s in China. Now, these reports are always a little bit confusing because the media doesn't do a great job of clarifying what exactly these numbers are, and the CPCA, China Passenger Car Association, seems to release different sets of numbers from different groups, so it can be hard to figure out whether they're talking about production or deliveries or wholesale or registrations, because they're often just referred to as the same generic term of sales. Personally, because I believe Tesla has the capability to sell every vehicle that they produce out of Gigafactory Shanghai at this point, what I more care about is the production number, especially so as Tesla ramps up that production number because that allows us to do some more forecasting, but that does not appear to be the number that we're getting here from Reuters. Reuters compares this 14,954 number with sales from April and May, saying, quote, Tesla sold 11,095 vehicles in May, up from around 3,635 units in April, CPCA data showed, end quote. Previously, we have heard production reports out of China of 11,211 vehicles for April and 11,501 vehicles for May, and that data has also been published by the CPCA. So if we hone in on that April number, clearly there's a large difference between 11,200 and the 3,600 that were quote-unquote sold. So I don't exactly know what the numbers in this report are, whether it is registrations or the government tracking individual vehicle sales or something else. In terms of actual production, the CPCA has reported on those numbers in the past, and that information seems to come from the China Ministry of Industry and Information Technology. I do not believe that we have that report yet, but Twitter user DKurik, who has been helpful in collecting this information in the past, did post a tweet a couple of days ago claiming that Tesla's June production in Shanghai was 10,393 vehicles. However, earlier today, the same user tweeted that there would be a press conference for June sales/production results on Friday, July 10th, 2 p.m. Beijing time. That would be 2 a.m. Eastern time on Friday, so we'll just have to see if there is any more news at that point. I don't want to go into too detailed of an analysis on this until we have more finite information, but if that number is correct, that would only be about 2,400 vehicles produced per week in Shanghai. That would be lower than April and May reports of 2,600 per week and about 3,500 per week, excluding known shutdowns. So we know that Tesla's production came in well below my forecast for the quarter. If the Shanghai production rate in June came down pretty significantly from the production rate in May, that would explain a discrepancy of about 5,000 units in production. So definitely something we'll be keeping a close eye out for more information on. Analyst Alex Potter of Piper Sandler, who we have had on the podcast a couple times, he follows the China situation very closely, shared some thoughts on the China situation in a note today. No updates to price target or anything like that, but he said, quote, overall, it still looks like Tesla is maxing out capacity at its Shanghai factory, end quote. So a bit confusing, but I will keep doing my best to help us all understand these reports coming out of China. Next up today, I wanted to briefly point out some comments that were made by Panasonic's CEO at an event for young entrepreneurs earlier this week on Elon Musk. This was reported on by Channel News Asia, and they included a few quotes from Panasonic's CEO. Of course, they are positive. You would be positive at an event like this. But the CEO said, quote, I believe only geniuses can hold on to big visions, and a genius I know is Elon Musk, end quote, saying that Musk is, quote, a genius who defies common sense and can be overly optimistic, end quote, which we know all too well, but that the optimism comes from Elon's larger vision, which can help drive past things that are simply inconvenient, but may also cause some of those things to be overlooked at times. Panasonic CEO said that for Musk, quote, compared to that vision, most things don't really matter, end quote. There seems to be a perpetually ongoing dialogue about Tesla and Panasonic's relationship and how sturdy it is. A lot of that is fair given the circumstances, but I thought it was helpful to see these comments from Panasonic's CEO, and certainly you would never expect anything less than fully respectful comments, but the structure of this reporting does make it seem that Panasonic CEO kind of went out of the way to say these nice things about Musk. Next today, we have another updated analyst note, this time from Goldman Sachs. We won't spend as long going through this as we did yesterday on the Morgan Stanley note. Remember, this is from the new coverage team with analyst Mark Delaney, rather than David Tamburino from Goldman Sachs of a while ago. Delaney's team has been much more positive on the stock. Previously, they had a $950 price target on Tesla. They've now increased that to $1,300. They say, quote, "Given the better than expected second quarter deliveries from Tesla, coupled with likely better margins than we previously anticipated, we raise our estimates and take our 12-month price target to $1,300, end quote. Despite the $950 price target that they previously had, they were actually pretty low on second quarter deliveries, forecasting only 64,000. So the actuals of about 90,500 came in more than 40% higher than their forecast. They have since increased their non-GAAP earnings per share forecast for 2020 to $2.25 per share, up from a loss of 40 cents per share for the year. Noting that the leaked emails that we have discussed from Elon Musk imply that there is a possibility of profitability for Q2, and that Tesla possibly posting, quote, near break even in a quarter with the Fremont factory shut down for several weeks implies better underlying profitability for the business than we had previously expected, end quote. This is the big reason these quarterly results matter. Obviously, a lot of us here are long-term investors and not as focused on the quarter-to-quarter numbers, but they do give us an indication of where Tesla is going. And that was probably the most overlooked thing in Q1, was the tremendous amount of progress that Tesla was making on the margin line, even in such early stages of ramp-ups in Shanghai and for the Model Y. Now, we did see some price cuts from Tesla in the second quarter, though also a renegotiated contract with Panasonic, so I think those margin expectations are likely to be exceeded again for second quarter results, which will again, as Delaney says here, show that Tesla's underlying profitability is strong. And not just strong, but improving, and that's what's really important for that long-term outlook. Goldman notes a few things in specific that they are looking for from the second quarter report, saying, quote, "We will look to better understand from the earnings report the Model Y backlog, as delivery times have declined despite media reports of production challenges, the reason for the Tesla price cuts inter-quarter, and the intermediate to longer-term margin outlook. We suggest that investors be tactical with the stock," end quote. Focus on the whatever backlog exists for the Model Y is misdirected in my opinion. Tesla's not selling it in Europe, they're not selling it in China, they're not selling the 7-seat version, they're not selling the standard range version, and of course, as always, they've done no advertising on it, but even from a marketing perspective, very little other marketing. So I'm not sure why the backlog would be important in that context, and I don't expect Tesla to share any information on that anyway. Price cuts we've talked about, I think that was mostly due to Tesla needing to move through so much inventory in the United States, specifically this quarter, because they didn't have production up and running in time to be able to ship to Europe, or at least not ship very much, and they probably had flexibility to lower prices anyway due to the renegotiation of the contract with Panasonic. So I think we already have pretty good answers on that. But then the margin outlook, yeah, I'm definitely curious to learn about that as well. Somebody asked when I will be doing an earnings preview episode. I will probably be doing that on Monday, July 20th or Monday, July 27th, depending on when Tesla's earnings report is scheduled for. I expect that to be the 22nd, but it might be on the 29th. Hopefully we'll have an announcement on that any day. Last year, Tesla announced that earnings would be on Wednesday, July 24th, on Thursday, July 11th. So if it is going to be on the 22nd this year, we may expect to hear that as soon as tomorrow, Thursday. Lastly today, I wanted to share a comment made by Sandy Munro of Munro & Associates. They have now completed their exhaustive teardown of the Tesla Model Y. Overall, Munro has been very complimentary of the design of the Model Y, though obviously still feels there are areas for improvement. But with the completion of that, Munro also now has completed a side-by-side comparison with the Model 3 teardown that they concluded in July of 2018 and the Model Y teardown. In a video released today, Munro commented on this comparison, saying, quote, "The results are shocking. There's a big giant difference between the cost of the Model 3 in 2018 and this Model Y in 2020, and the cost went down significantly," end quote. And he put a lot of emphasis on significantly. Tesla on earnings calls in the past, and most recently on the Q1 earnings call, has said that the cost of goods sold on the Model Y should be similar to the Model 3, which is impressive given the roughly 10% larger size of the Model Y. So what Munro is saying here should support that idea, and he's clearly very impressed with how Tesla has been able to control costs on the vehicle. It is still worth bearing in mind, though, that the teardown that they did on the Model 3 was from 2018, so over the last 2 years, Tesla has undoubtedly improved the cost for the Model 3 as well. So while Munro says that there is a, quote, giant big difference, end quote, between the two costs, there may not be such a difference today, or maybe no difference at all. Even similar costs between the two vehicles would be a great thing, And if they really are actually lower, well, then get excited because a $35,000 Model Y would be attainable and would sell, obviously, incredibly well. That'll wrap it up for today, though. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're also following me on Twitter at Tesla Podcast. And I'll see you tomorrow for the Thursday, July 9th episode of Tesla Daily. Thank you.